During the Asian session on Wednesday, spot gold entered the year-end closing battle with a relatively oscillating and cautious trend after rebounding in the previous trading days. The short-term upward momentum weakened significantly today as the market focused on year-end liquidity changes and policy expectations. Currently, spot gold is trading in the range of $4,355 to $4,360 per ounce, with intraday volatility converging significantly compared to recent sharp fluctuations. Market participation sentiment tends to be cautious, and most investors are holding positions and waiting. On the news front, the performance of the domestic market also reflects the year-end sentiment. The main gold futures contract 2,502 on the Shanghai Futures Exchange closed flat in daytime trading at 617.60 yuan, with a trading volume of 185,332 lots and open interest decreasing by 12,743 lots. This oscillating and flat posture clearly indicates that investors' wait-and-see sentiment at the end of the year is very strong, and no one is willing to take risks easily at the year-end. On the macro front, market expectations for Federal Reserve policy at the end of the year remain the core factor affecting gold. Coupled with the relative calm in global geopolitical conditions, short-term safe haven demand support for gold has weakened. However, there's no need to worry too much. For the whole year, the US dollar index has fallen by nearly 10%, and the Federal Reserve has cut interest rates 3 times in 2025. This loose environment has always laid a solid supporting foundation for the medium and long-term trend of gold. This short-term oscillation is mostly caused by the superposition of year-end profit-taking and technical adjustments, not a trend reversal. Short-term technical outlook analysis from the daily gold chart. After rebounding in the previous trading days, it completely failed to maintain upward momentum today, with the K-line showing a small bearish doji trend. This signal indicates that short-term long-short games are in a stalemate, and neither side can gain a clear advantage. Technically, gold is still trading below the 5-day and 10-day moving averages, and the short-term moving average system maintains a downward trend, forming continuous pressure. The short-term correction pattern has not changed at all. In terms of indicators, the Relative Strength Index RSI is running around 45 in a weak range and showing signs of turning downward. This suggests insufficient short-term upward momentum and the risk of a second pullback. Everyone must be vigilant and not blindly bottom hunt. Market liquidity remains tight on the year-end closing day, and investors are likely to hold positions and wait. Gold will maintain a narrow oscillation pattern in the short term, making sharp fluctuations difficult. Technical correction signals have not subsided, and rebound momentum is insufficient. It is likely to end the year in this oscillating posture, and it is very difficult to have a trending market. However, in the medium and long term, factors such as loose monetary policy and geopolitical risks will still support gold's upward movement. This short-term adjustment is only a technical correction after the annual sharp rise. In terms of resistance levels, the primary short-term focus is on the $4,360, $4,365 range. This range is an important resistance level. If it can be effectively broken through and stabilized, there is short-term potential to rebound further towards the $4,380 resistance range. But if the rebound encounters resistance, it is very likely to return to oscillating downward. As for the $4,400 integer mark, as an important psychological resistance, it is extremely difficult to break through before the year end, and it will become the core pressure level for short-term long-short games. In terms of support levels, the first strong support zone below lies at $4,330, $4,335, with quite solid backing strength. If this zone is breached, we need to keep a closer eye on the $4,310, $4,315 range next. Holding this level could help curb the short-term correction trend. For the longer term, the $4,300 round figure serves as a key support level for the year-end close. A break below this level may trigger a deeper correction at any time. This is something you must keep a close watch on. Important disclaimer: all content above is for reference only and does not constitute any investment advice. Any trading decisions made based on this information are at your own risk of profit or loss. Want to get real-time analysis of gold price trends and major market news as soon as they come out? Hit subscribe, give this a like, and share it with your fellow investor friends right now. Thanks for watching.